Hey, everybody, and welcome to the For Female Founders podcast series, where we're helping women in business learn to thrive, not just survive. I am your host, Sarah Bundy, and today you might recognize my lovely guest, Julia Chung. She's been with us before, and she is amazing. You guys are going to love today's show. She is the co-founder and CEO of springplans.ca. She is an author, an advisor, a serial entrepreneur. She's also the chair of the Financial Planning Association of Canada, and she's on the board of directors for Family Enterprise Canada. Julia, welcome back to the show.
Thanks so much for having me. That intro makes me sound like little maniac there.
Well, I know that you're the type of person like me who has a full schedule, lots of back-to-back stuff, and likes to keep going. So thank you for spending some time with us today. We had so many people tell us what a great show that you did last time, and they learned a ton about money from you. So we wanted to have you back because you're a wealth of knowledge. Get it? A wealth of knowledge. Sorry, that was terrible. And so, as a piggyback of last time, we talked a little bit about taxes, how to plan for taxes, how to correctly set up your company if you're doing an incorporation or solo proprietorship. And you gave us some really good action items around planning for the future and money management and mitigation and things like that. So we want to take it a step further today, and we're going to talk about what are all of the mistakes and watchouts that companies make at different stages of their organization, whether they're a startup, they're in growth mode, or they are looking to exit. Sound good?
Sounds great.
Perfect. Let's start with startups then. Okay. What are the biggest mistakes that you find small companies make when they are setting up their organization for the first time?
Oh, it's so much to do with expectations. I think there's this combination of expectations and fear that'll really catch somebody who's in startup mode. Now, the expectations are, of course, in order to start a business, you have to be a little bit delusional. So we just all accept that. We have done something delusional. This is kind of nutty. So you're going in and you must have a positive outlook about what's possible and things are going to be great, or else why the heck would you do this? Because it's torture. Absolutely, I get that. At the same time, you have to have some realistic expectations. We want to have the business that's going to take off immediately, but it's probably not. Just like great bands you've listened to and you're like, wow, these people were an overnight success. And then you find out they've been touring for 10 years. This is how businesses become successful. It takes a really long time. I know you don't want to think about that because this is really going to bring you down. And I don't want you to spend a lot of time on it. But the expectations can be really, really outsized. So last time we talked about, having an emergency fund, having some backup, knowing what kind of runway that you have. I remember the first business I opened, my dad, who also likes to open many businesses, said, year 2 is going to get you. That's the one. You're going to be fine in the first year. I'm not going to help you with any money in year 1, $0. And I'm like, okay. And he said, but year 2, I am ready for the call, because that is when your expectations and reality have started to meet. And it's not looking so good. So just managing those expectations, knowing that you're going to fall. You're absolutely going to fall. That's part of the process. Another expectation I often find is that people will be really good at their job. And they know that the company they're working for is charging this much for the thing you're doing. And you can go out there and charge that much too. You don't get to keep all of that, first of all. A lot of that goes into overhead. And second of all, you don't get to spend as much time doing the thing you do. Especially when you're in startup mode, you are going to be spending far more time on the operation and the management and learning how to run this business than you are on doing the thing. And that's going to cut into your ability to earn. So just having expectations about, I think I'm charging, a rate of whatever, because that would give me an income of that. I mean, you're probably going to have to charge double or triple in order to give yourself the time you need to run the business. This is going to be the most expensive MBA you've ever experienced.
You make a really great point on pricing. And I feel like a lot of companies don't understand how to come up with their pricing correctly when they're starting their business. What are some of the mistakes and advice you would give people when they're trying to figure out how to price themselves in a market? With Awin's marketing technology platform, you can easily discover the best partners who connect you with huge audiences of new customers. Understand how your partnerships are performing with intuitive reporting and only pay for the results you need. Start today and grow your own way with Awin.
First of all, know that you're going to get it wrong. It's probably going to be too low. When you're talking to customers and clients, you can say, this is our initial price. And I think that's kind of the best way to go at it. I remember talking to my executive coach, Michelle Saragarali, a long time ago, and we were talking about pricing. And she said, if your price doesn't make the person on the other side go, oh, then it's too low. But then you might get your price got too high, and you just have to recognize that you're in exploration mode for this first little bit. You are guaranteed to shoot too low, so charge more than you think you should, and then watch for the, oh, maybe I'll have to think about it, or I have to look into my budget. That's a good sign. It's going to feel terrible, but it's a really good sign.
At which point do you feel startups and small businesses should start to hire people to support the demand and the money coming in?
Immediately. I was talking to a mentee the other day about administrative support, and I think you know how much I believe in the importance of administrative support. And he said, well, I think I might, when should I be ready to hire staff? And I said, right now, absolutely right now. And he said, oh, well, I haven't made enough money to pay both me and staff. I'm like, that's the neat thing. When I opened my business for the first time, I paid my staff. I didn't pay me. Because what I needed was a functioning foundation first before I could go out and do the thing. And the other thing about not hiring staff that creates a really big problem for people in the beginning is that when your fear sets in, you're like, I'm kind of an idiot. This was a bad idea. I'm scared to sell. I'm scared to go out and talk to people, because that's normal. You're going to be scared. So what you'll do instead, you will do the admin. Because that is part of your business. It's still important. It's still super valuable. And here's your justification for not going out there and talking to people about your business. You are too busy setting things up, sending out emails, answering questions from your accountant. Totally get it. Oh, and you think you should manage your own calendar because that feels personal to the one on the other end. They don't care. And they're kind of think that you might be more of a big deal and actually well set up if you have someone else managing your calendar. So set aside those things, invest in the foundations of your business. Recognize that what you're building is the foundation of your business first, and it's not the foundation of your income first.
Let's talk a little bit about what those foundations of a business are. People do need to spend whatever money they have when they're in startup mode on the right things. Yeah. So you had mentioned hiring staff, capable staff, not incapable staff. Yeah. You need the correct people who can execute, that you can enable, that you can entrust to do the right work so that you can go and move on to the next part of your business. So staff is one. What are some of the other areas that companies should be investing in the beginning? And what are the mistakes they make in investing in the wrong things at the wrong time?
It's interesting because it has a lot to do with where that person came from. So if their business is the thing that they used to do for their job, they'll invest heavily in all of the things that were related to the things that they used to do for their job. And those might not be the right things. So I speak with a lot of people who are starting financial planning businesses. And so they're very, very concerned about the financial planning software, which absolutely, that's correct. I totally get that. But what they're not concerned about is the actual running of the operation. How does the money come in? And how does it go out? How do you ask people for money? How do they pay you? Make it easy. Oh my gosh. Please don't make this difficult for people to pay you. Make it the simplest things. Start there. How will people pay me? How will I invoice them? Where does it come in? What are the structures that are set up to deliver the thing that I'm delivering? Do I know what I'm delivering? Have I just come up with an idea and been like, people will get it? That's not true. Who are you working with? What do they want? How have you set up your communications with those people, whether at a mass level or a small direct level? How easy have you made it for them to pay you? What kind of structures do you have in place to pay your staff? What is your business's structure? Is it a sole proprietorship? Is it an incorporated company? Who owns it? Are there agreements between those people who own it? Do you have advisors? Oh my God, it goes on. My son, who has a startup business that's about a year old, said to me this summer, I guess running a business means knowing a lot about not just tax, but also law. Yeah, I'm so sorry, kiddo. He's like, I'm just trying to run a business. I'm like, I know. But this is part of it. You really need all of these foundational structures. We're not going to get them all right the first time, but we have to recognize that you have to make a decision about what business you're in, how you're talking about it, how you pay bills, and how people pay you. If you don't have those nailed down, at least like some starting points, you don't have a business yet.
And you make a great point about understanding even enough to be dangerous, the legal side, the operation side, the technology side, the sales and marketing side. That's a lot to invest in when you're a startup.
Liability insurance.
And insurance. Great point. And listen to the previous episode we did with you, Julia, about tax planning and cash flow management on top of that.
Yeah.
That's a lot to invest in.
It is.
How should people think about where to get the money from? Because some people are bootstrapping, some people are raising funds, some people take out loans, some people phone their parents. Like, what do you, in your opinion, based on your expertise as a financial strategist, where should people be getting their money when they're starting out?
Well, first I want to just mention the word bootstrapping and where that even comes from. It comes from, I think it was like 1920s or something like that. The idea of pulling yourself up by your bootstraps. The intention of that statement was to say this is actually impossible. Like you can't lift yourself with your bootstraps. And I think the point that I want to make about that is you can't do anything alone. You're never in business alone. And the word company, when you think about that too, if you see how it's used in other areas, company, like in the military, what does a company represent? It's a group of people. And I think a lot of times people believe that business and math and money and all these things are rational and logical, and they're not about people. And if you haven't spent the time thinking about who are the people that are involved in my business, what is the culture of my business, what do I want it to be, right? When I founded AdminSlayer back in 2015 or something like that, we actually designed the culture first before we designed anything else. And it is continuing to be a very, very successful company because we did it that way. I'm really proud of that. But also, what does that mean for the people we work with, strategic partners, what kind of experts we work with, the clients and customers we work with, who else is talking about us? What does it mean to be part of these groups of people? I think that's really important. And then when we're thinking about where we get the financing from, if we understand what we value, why, what kind of culture and community we're building, then we have a better understanding of where we can get the money. I know that seems insane, but, but it's kind
opportunities arise.
They do. And also, it gives you some boundaries about who you want to say no to and what kind of deals you want to say no to. So it could be that you get offers for people who want to invest in your company and they want a piece of equity. And you're like, I don't know what equity means. Sounds great. And I don't know what the impacts of that are. And I don't know if that makes sense for the type of business that I've decided I want to build. And there's people that want to lend you money. There absolutely are. And you have to ask yourself, what is the agreement that comes into this loan? And does that fit with the vision and the values and the mission I've set up for this company and the culture that we have? Does borrowing from my parents make sense? Does saving up for it for the next 5 years make sense? It all has to fit into there. I am the technical editor of a book called oh gosh, it's a For Dummies book. You'd think I'd remember the name, but it is about financing your startup. I think it's called Financing Your Startup for Dummies. It is out there. It came out this year. It has lots of great ideas of different ways you can finance, but I would absolutely say you really need to start with why, because if you don't, you are going to end up in some bad finance deals.
I'm going to use two examples just to get a little bit more clarity on this, because I know some people are asking this right now, and I think they need to borrow money. Let's say you've got a startup and they need to borrow money.
Yeah.
Would you recommend, and assuming they know their why and their culture is already defined and they know who their people are, is it better to borrow money from a bank, or is it better to borrow money from a private lender, or give up equity and take some cash in exchange for a portion of the company that, if sold later, that person gets a return? What are you seeing is the most common, or what are the mistakes? Again, we're talking about mistakes and watchouts. What are the mistakes people are making when you're considering those three options?
So what we have to look at is, what is the agreement? What are we agreeing to? So what's the interest payment? What's the, if in a loan, what's the interest payment? What's the payback structure? Can I imagine myself in the worst possible situation? And if so, how would the person on the other end deal with that? So what I've found with, a lot of major banks is many of them don't have much sympathy for you when things go wrong. Some of them that are more community oriented. So in Canada, we have the Business Development Bank of Canada. They can be pretty flexible. And then there's organizations like Community Futures and that kind of stuff that are related. They, again, can be pretty flexible. So I want you to look at the flexibility, imagine things going horrifyingly wrong, and then think about who's going to be sympathetic to your plight. My experience is the banks are not. Most of the very successful entrepreneurs I work with are trying to find every way not to work with banks because they have PTSD from their startup situation, which is not to run them down, but I think you need to know what you're getting into. And with the equity side of things, it's just like having a business partner. Even if they're like, no, I'll stay out of it. Here's a bunch of money. Talk to me later. They might mean that. But whenever we're in business with someone, and that is what you have done when someone has bought your equity, they are now a consideration in everything you do going forward. They absolutely have a say, even if they're a silent partner. And if you don't want to marry that person, if you don't want to look at them across the dinner table on the worst days of your life, you should not be in business with them.
That's perfect and great advice, Julia. Thank you. Let's move on to the growth stage of a business. So we're all set up, startup's going, we're making money, we're paying bills, we've got team, culture strong, we figured out our pricing. What are the biggest mistakes companies make when they're investing in their companies in growth mode?
Assuming that what got you here is going to get you there. So the world is changing around us constantly, right? You just think of the last handful of years, all the things that have changed, and the rate of change is increasing rapidly all the time. The world's knowledge is changing all the time. So what I see is people either saying, well, this worked, so I'm going to do it forever, and I'm never going to think about anything else. That is going to torpedo you. And we've seen examples of really big businesses doing exactly that. If you'd like to look at GE, for example, they did some great things, and then they just kept doing exactly the same thing. The other thing is where we go way too far on the other side. Oh, there's a new thing. I can't be left out. I have to grab onto this and grab onto that. A really great example of what's getting people excited right now is AI. AI is great and it can be really useful, but don't just be like, oh, well, I guess it's AI now, and scrap everything you were doing and thinking about and being like, I'm going to invest in this. And entrepreneurs are very likely to do that. We like interesting, shiny things. There's a like 5 times greater chance that you have ADHD than anybody else in the general population. I have ADHD. I know my people. Right? And so the shiny things are interesting. And what we did before is boring.
Correct.
So we have to manage our impulse control around the shiny thing and also around the fear that we're not going to keep up at the same time that we actually have to try and keep up. So really, really hard mental space to be in.
And that's where it's a good idea to invest in team members who can keep you on track and are
Oh my
very operationally focused and can look at the numbers and data for you.
yes.
If you
And
have that ADHD shiny object syndrome, which I know I definitely do, and my team's probably laughing if they're listening to this right now. But yes, I agree.
and you need people who not only will tell you that they think you're being an idiot, but that you'll listen to. And not like blindly listen to. I've had discussions with people who are like, I think you're being a dummy. And I'm like, okay, that's fair. I'm not going to just blindly follow and believe that, but we're going to have a conversation about it. I don't, I don't need to have ego about this. Like, I need to make money. I need to have a sustainable business. So if I'm surrounding myself with smart people who are unafraid to tell me when I'm being a dummy or that I'm too tired because I've been burning myself out or any of the things that I do to myself, I need to rely on those people. And we need to have the level of trust and compassion and self-awareness to be able to say, this is good information. I appreciate you. This is not attacking my ego, and I'm going to take that into consideration and be open to change and adjustment. And you're going to be open to the fact that I might not take all your advice. Like I always say, when it comes to running your business, on top of getting that really expensive MBA, you go through this incredible, in-depth, emotional, mental process. Like if you don't have a therapist, please get one, because everything from your childhood or teenage years or anything else that you haven't worked on, it is going to show up in your business, and it's going to show up right at growth mode. And it is going to torpedo everything if you don't do your work.
That's actually a really interesting perspective that I did not expect you to recommend, but I actually can attest that that is true. There was a part of scaling and growing AIM where I completely shut down at one point because all of the things that happened in my childhood and teenage years suddenly all came out while I was running a business. It was the weirdest thing. And I actually had to go get a therapist and sort through that so that I could continue to scale and grow my organization without that odd subconscious PTSD behind making bad decisions. So, or just blurred decisions, right?
Yeah.
So I think that's a very interesting piece of advice. Invest in a therapist,
Oh my
invest in counseling, maybe even invest in a coach to help hold you accountable.
Absolutely. All of those things. You need people around you to support you. The stuff that you're doing and running a business is emotionally, physically, mentally, everything. It's so hard, and we do it because it's pretty good too. But it's also it's really hard. It's really taxing. It's hard on your family. And I mean, when people ask me about general advice for financial planning, my sort of joke is don't have children, don't get divorced. But just because both of those things cost so much money. But also recognize that having children and being there for them is really, really important. And if you're doing this while you're running a business, you might end up neglecting those relationships. That's going to mess everything up for you. Not worth it. And getting divorced, not worth it. And the research is really good, especially for your women out there, that your options for succeeding are have an amazing partner or have no partner at all.
Very interesting insight. And it's interesting that there are now stats to back that up as well.
Yeah.
Thank you for sharing that. Let's move on to the exit stage of an organization. You've got a company that has scaled, they've grown, or maybe not, and they are ready to not be there anymore. They are ready to be acquired. What are the biggest mistakes that business owners make when they are preparing for an exit and actually going through the exit process?
One is not preparing at all, which is lots of people. They're like, oh, hey, something's happening. Or, I want to retire now. I'm going to sell my business. I have invested years, dollars, whatever, so it's worth this much money in my mind. So you've done no preparation. You've talked to nobody. You don't understand what the market is like. When you were selling your business, you were selling a product, and it's just the same as every other sales process you went through in your business. What would you prepare? What would need to be ready? What do your books look like? There's probably lots of garbage in there because It's like having a house. You build up stuff over time, right? You're like, what is this? Why do I still have that? That's going to be in your books. That's going to be in your structure. Are you owning the way your business is built in a way that it could be acquired in a tax efficient way, and it is actually compelling to somebody who wants to buy it? Particularly, they want to buy the shares in your company, and as opposed to the asset that it's are owned by the company. Really different tax outcomes there. But the biggest thing I find is people say, oh, I've been offered X number of dollars. And that feels like a really large amount of money. Like, holy smokes, this, I don't have to work and you're going to give me millions. Great. I'm going to sign on the dotted line right now. And what you didn't do was figure out how long that money was actually going to last you. Is that worth what you need to get out of that business and actually leave? Or are you going to run through that money in 5 years, which is what I've seen very much on average? You can run through that money in 5 years and you're going to have to start all over again because you didn't look at the tax implications. So maybe it was $5 million, $10 million, whatever. But after taxes, it was much, much less. And then your cost of living looked like this. And also you had some celebratory events. And you know what I mean? Like, it just, the not planning and the not thinking about it because this looks relieving and this looks like the right amount of money and it feels really good. I'm so sorry. Please slow down, step back, think about what the outcomes are. If your business is worth money right now to somebody, you have some time.
That's good advice. To end our wonderful chat, thank you for being here again. What are some final advice you would give to small businesses going into the future with all of the changes that are happening in the economy, in technology, in culture today?
Get a community. Honestly, there's nothing that has provided me with more kind of mental, emotional, and health wealth than a really, really good support system. Think about who your ideal people are for your personal board of directors. And I've done this with a couple of people that I've coached. Just let's build your board of directors. There's somebody like me, but what else don't you know about that you wish you knew about? Who can we bring on? And as much as I very much want women to stop doing things for free, there are a lot of women out there who will absolutely cheer you on and give you part of their time and be part of your board of directors and your sounding board because they want to see you succeed. I totally recommend building that community.
Thank you, Julia. Appreciate you so much. Thanks for sharing your expertise as always. I know your schedule is crazy and fitting us in is a gift. So thank you for that. If anybody wants to contact you or ask you more questions, what's the best way to reach you?
Just get on my website, springplans.ca. There is a contact section called waiting list, and it's all about people who want to be my clients. But if you just want to add in like a request to talk, please throw that down there.
Sounds great. Thanks, Julia. And good luck, everybody out there. Chat soon. Thanks for listening to the For Female Founders podcast series. If you enjoyed this episode, please go ahead and hit subscribe, like, or comment below so we can continue to support women in business by helping them thrive, not just survive. We'll see you on the next show.